All right, let's run this back. This is the post federal chair of the United States speech. Today was the Jackson Hole Symposium. It was Jerome Powell's last speech at the Jackson Hole Symposium. His term ends on May 2026. Ladies and gentlemen, welcome back to another episode with Sir Hans Felix. It's going to be one heck of a webinar. Let's talk about some of the things that happened today. I want to welcome everyone who's joining in, and let's talk about some of the post results of this market, which was an incredible push off of the choppiness that we experienced yesterday and the day before. Um, we'll get to discuss some of the experiences you guys have had. Let me tell you a little bit about my experience. Now, first and foremost, I have definitely slowed down in my trading um, as of this month. The loss that I took in the beginning of the month was a very rude awakening, which reminded me that if you don't slow down, the market will slow you down. So you choose, right? You choose whichever one. And so I had to learn to really come back to a humble state of not forcing it, which also reminded me why, like, I had in the beginning of the year, I kind of tweaked or turned off the beast version of Hans that can really put up numbers, but sometimes like there are certain areas in my own reality, personal reality where I was a little anxious in how I performed the year before. I know I can put up big numbers, but big numbers also come with like big losses sometimes, or it makes you it kind of put some pressure on your mindset. So, as this meeting is recorded, I want to remind you guys that I'll always bring a psychological aspect, a technical and fundamental aspect of my webinars. So, what I understood after the loss that I took in the time that I have taken off, and just me gradually pacing my own trading, um, I recognize the signs that this is what I was fearful about, turning it on, going after big numbers, and being super consistent in my excellence. However, um, you got to know when to walk away sooner. We talked about that last time in the webinar a few days ago. Walking away sooner kind of gives you a chance to like recalibrate on what to do next. And it might even give you a chance to pretty much give the market some room to run and do what it does. Yeah, you might miss a setup, but also you might keep yourself from doing a misstep. And and so it was a lot of lessons, right? A lot of things I'm relearning, remembering. But it also reminded me that I haven't lost my edge. I just had lost my cool. Right. So all of this has helped me to kind of recalibrate and remember who I am. So just wanted to leave that part. I know somebody probably needing to hear this. And it just reminds you when there's better volatility in the markets, all of a sudden you start to see better. Um, and sometimes you have to also know when you're ahead of the game, slow down. And even if you skip a couple days, you'll give yourself time to clock out, because when you clock back in, you'll clock back in with more energy, more enthusiasm, your clear-headed mindset, and you're still gonna be ahead of your time. All right. So today was one of those days where um, we noticed the volatility literally picked back up just as the Fed Jerome Powell had started speaking. And as he started speaking, he started mentioning things like, hey, there is a point where we might be considering decreasing interest rates because of how we've seen the numbers. Um, and and we all know when interest rates decrease, then that makes the dollar, the American dollar, also decrease its strength and how much um and how much it can actually be worth. All right. So the dollar losing its value is not really just about losing value, it's about decreasing the power that it puts on the influence that it has around the world. All right. So Because of that, of course, equity markets react inversely. So you got gold. I had a feeling gold would buy. Um, Yesterday I started putting myself in position, and the position looked good, and then they started losing volume. But I'm like, you know what? Price might sell off a little bit more towards 3,300, or it might just retest this area where it broke structure. And that's what they did this morning. The market basically retested this point of interest instead of selling some more, all because these institutions, they priced in the volume instead at around this bid and ask price. So this discounted demand area of interest price came back here instead. And as soon as Jerome Powell started talking his talk, we saw a lot of money being pumped into these equities markets. I caught this buy right here. I almost didn't trade today, but I was like, oh, shoot, what the heck? Okay, now I got in. Got in around 33.42. I didn't even put a stop loss, really just was making sure price didn't come back to any areas from here. Um, but also, there's something we got to realize when price and the volatility kicks back in, you have to know how to manage your positions, right? If you're putting in aggressive positions, then you got to know when you're trying to exit, or you gotta be mindful of how much profit you're in and how much partials you need to close so you can let the less aggressive positions continue, or you can close everything. So sometimes I know it's a juggling act when you're thinking about, damn, what should I do? What should I do? What should I do? But sometimes you might even want to scale positions, meaning you add one, two, three, and then the one from the beginning. Once you close partials, you move stop loss into profit. You let that rock if you believe that there will be continuation. So, and then there's one that I'm going to start implementing, putting both my middle to moderate lot sizes forward, and then also in between have my conservative lot sizes. So when I'm closing positions, I leave still some good positions that were early to still be running instead of me closing everything because I want the profit, the bulk of the profit. So I'm going to be implementing that into my strategy as well. All because, like, when you have taken a loss, it gives you time to think about how to re strategize. And that's what I was able to do as I was giving myself time. Now, why has the market pushed so much? Number one, they're looking at a positive outlook that interest rates will cut in September or in the months after that. When interest rates get cut, that brings in a risk on environment, which means interest rates cut mean you won't get charged as much for money that's being circulated, whether it's mortgages, whether it's borrowing money from the banks, whether it's the interest rates that you're being charged on your car note, and the economy overall. So then investors are like, less less taxes to be charged, less interest rates to be charged. Okay, that means we can be a little bit more aggressive at taking the opportunity of getting into the markets. And so these institutions do that so we can also get some more profit for those who are invested in like SPX funds, ETFs. But at the same time, government bonds take a dive a little bit because bonds are the type of markets where when you invest in a bond market, the higher the interest rates, the more returns you get because you're letting the government borrow money from you. And then when let's say you opted in for like a 2 year bond, by the end of the 2 year session, you will get back, let's say you invested $1,000 and then the bond for the interest rate was at 5, then you're going to get $1,000 plus 5% more on your money, right? So once the interest rates lower, then you're going to get less, but still, it just depends on how long the bond expiration date is for you, right? So now when interest rates are lowering, then investors, knowing that interest rates are lowering, they're going to go put their money in other assets and vehicles that are going to give them more return for their money, since now using the bond market as a strategy is when things are inflationary. At least they know their money is working for them elsewhere at a good high rate. Okay. So now, because the economy has gotten very sustainable, and I applaud Jerome Powell for like standing 10 toes, doing what he can. And even if he walks away without even like lowering interest rates, at least he stood up and didn't just, in the midst of pressure, he still was able to like hold himself down, and how him and his whole committee, his whole cabinet maintained this economy even throughout COVID. When it was time to decrease interest rates, they did. When it was time to increase it gradually, they did. When it was time to hold it steady, they did. And holding a steady speed, even while you're driving, makes more sense, because then you can deviate. But just gradually slowing down, let's say while it's raining, you might hydroplane. And so he had a lot of ways to, he had a lot of obstacles to navigate through, and he got a standing ovation at the Jackson Hole Symposium as his last meeting, where he carried himself well and he carried this economy well in the midst of things. They also talked about tariffs that are still ongoing, but the economy is still in a shape where the United States, because they've raised tariffs on many other countries, uh, they're able to see, well, the balance sheet of the U.S. economy is seeing, well, the U.S. Treasury is seeing a lot of returns in profit because of the tariffs that they're charging. And this made me think a little bit. You know how obviously we know the rich is getting richer, but the rich is also smart in a way of understanding that they'll make their profits, but to prevent a civil war, or to prevent people from like starting to like really be at an uproar, they're probably going to be giving back in certain ways too, just to like still keep the economy in a way where we're feeling the tension, we're feeling the pressure, but oh, you can't say I didn't give you back some money. So I'm sure there's going to be some incentivized programs and things that's going to help show that, oh, the rich aren't so bad after all. Those who, the elites who are controlling the supply chains of money, are always going to be mindful. But first, they're going to slaughter the pigs. They're going to make the bulk of their profit just so they can put it back towards economies throughout the world. So now, as people like us who are tapped into like trading and potentially or possibly hopefully investing, we got to understand like how this benefits us in a way, right? Invest in markets that are always going to be rising no matter what. Soon as this man Powell spoke about potential interest rates cuts, we saw the markets react. And I'm sure some of you guys caught this buy here. This was crazy. Like, bro, it was, I mean, since the beginning of this price action here, this market done moved at about 1,000 points in 8 hours, right? In 8 hours. So now, how did they do this? And this is where it gets tricky sometimes, right? When price throughout the week, and I've seen it multiple times, like they'll buy, but they'll lose volume. Even Wednesday, I'm like, well, I guess we're a bearish September, bearish August. Nah. And a pair like US 30, even if it sells, like we always got to look out for what's on the left. 4 hour structure on A cap price action here look as as if the retracement happened as far as last Wednesday's low. All right. Then we bounced off of it twice and they took off. On Forex.com's server, price looked like it pulled back right into Thursday's lows, at most Wednesday's lows. So it's kind of, it's very similar. So the retracement looked like it was going to sell off a little bit more, but in reality, the 4 hour structure is always a time frame and was a compass that we should always pay attention to when it comes to uh, trading YM or trading the Dow Jones because all they need is the right volume just to kick this back up, which is why it's important at times to also like think and conservative, moderate levels because a lot of times we want to get in at the best entry, but other times it's important to understand how to cost average your strategy too. You could have been earlier. I could have been earlier if I had like thought about a more cost averaged position with my stop loss under the low. It's just that the points for me, the points were a little bit much. I'm like, damn, ugh, where the heck do I put my stop loss? But I'm gonna start practicing some like moderate cost average uh strategies too, because like if I gotta put my stop loss 300 points, but I have to just significantly decrease my risk, then that's what I'm gonna have to do. Because outside of the previous day lows was the best area to play stop loss, and being hesitant will cost you sometimes if there's a beautiful turnout like this. I don't know if that makes sense to anybody. If I'm speaking to anybody, if it's resonating, let me know in the chat. Let me know in the chat. All right. So far, this is what it's looking like. That's causing this market to push that up. All right. So as of this afternoon, we might see price kind of stagnate a little bit. I'm hoping for Monday price to pull back. Maybe there's never any guarantees of that, but uh, there definitely will be more bullish momentum out of price, all because of what just happened here. Now, let's go to Forex Factory real quick. All right, I think Federal Reserve just posted um, a bit of what Jerome Powell had said. So, over the course of this year, the U.S. economy has shown resilience in the context of sweeping changes in economic policy. In terms of the Fed's dual mandate goals, I'm starting to sound like him, the labor market remains near maximum employment, and inflation, though, is still somewhat elevated, has come down to a great deal of its post-pandemic high. Right there, this signify like, yeah, we're not doing too bad. Things have increased since COVID because the interest rates did drop to zero. And then so like over the course of these 5 years, they definitely elevated the inflation rate just to keep the money supply from being overwhelming or too printed for no reason and just not getting a return from the banks. So he says, in my remarks today, I will address the current economic situation and near-term outlook for monetary policy. He said, I will then turn to the results of our second public review of our monetary policy framework as captured in the revised statement on longer run goals and monetary policy strategy that we released today. So he was like, when I appeared, this is the current economic conditions and near term outlook. He said, when I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25 to 5.5% for more than a year. The restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. For those who don't understand what aggregate demand is this right here. It's a candle that looks like this. It's price action that's super, super, super like powerful. Just like where, what you saw in November when they announced that Trump was elected is aggregate demand. Like, yo, this joint is crazy. This joint is OC. Like you see hella demand for prices pushing, pushing, pushing so fast, so volatile. That's aggregate demand. There's a lot of demand of price action wherever you look. So that had to be controlled. And so inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. upside risk to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent three Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remarking the global trading system. Tighter immigration policy has led to an abrupt slowdown. So look at this right here, though. We are literally saying that immigration, and we're not just thinking Mexicans, we're thinking the whole diaspora of this country. Immigration has led to an abrupt slowdown in labor force growth, which is literally admitting that immigrants definitely contribute significantly to the U.S. economy. Now, over the longer run, changes in tax, spending, and regulatory policies may have also have important implications for economic growth and productivity. There's significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. My man is literally saying, yo, because of all the bullshit that just happened with immigration enforcement, we have no idea how much worse things or what impact it will uh inflict. We already seen a bit of it. We don't even know how much this will have some lasting effects. However, that's not his problem to fix. However, though, the changes in trade and immigration policies have affected both supply and demand. In this environment, though, distinguishing cyclical developments from trend and structural developments is difficult, and the distinction and critical because monetary is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. See, he's saying, listen, I can only do so much with what I'm given. So now the labor market is the labor market. Like he, it's not because of him. He has nothing to do with immigration, but now the economy as a whole has been impacted by immigration. Then there's tariffs, right? So the labor market is a case in point. The July employment report released earlier this month showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months. And that's down from 168,000 per month. That's crazy. All right. So let's keep moving. Let's keep moving. I'm sure you guys are probably getting bored already, but turning into inflation, higher tariffs have begun to push prices up in some categories of goods. Estimates based on the latest available data indicates that damn, the notifications is going crazy. Prices just going crazy everywhere. So this is where the part gets good. He said it is also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic. Now, in this case, inflation is not a scary word here because what he's saying is tariffs that are incurred. That's when you know that boy went to college. Incurred is now bringing in increase in profits to the United States. So inflation dynamic showcases that there's going to be pressure on prices from tariffs because one, when you're charging your plug more tariffs to make the to make the transaction happen, then that puts a little bit pressure on the supplier to say, hey, if you're going to charge me, then I'm going to have to increase my prices a little bit, even though you're making surplus profits because you're charging the world tariffs on goods. All right. So America, especially under the presidency of Trump, we're racking in a lot of money right now. Like 300 billion is coming in. Like money is coming in. So We might see increases of price because of tariffs, but we're also seeing profit coming in. Not that it's just a depressionary season, not that um we're dealing with what's it called? What's the word? It's not so specific that we are in a recession because there is increase of profit. There's increase in revenue in multiple sectors because of the tariffs that are brought upon towards the market. Now, he said, given that the labor market is not particularly tight and faces increasing downside risk, the outcome does not seem likely. Right? Now, another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. We all know that we're suffering from it, right? Measures of longer term inflation expectations, however, as reflected in market and survey based measures, appear to remain well anchored, and consistent with our longer run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one time increase in the price level to become an ongoing inflation problem. Putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risk to employment to the downside, a challenging situation. Now, here's the part I really like: the evolution of monetary policy framework. Turning to my second topic, our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. And he was like, yo, we remain fully committed to fulfilling our mandate. But they have seen some changes that they want to make out of the monetary policy, and they review it as a natural progression grounded in our ever evolving understanding of our economy. Because let's be honest, what's written in the books versus what's happening right now, those are like various. I wouldn't say polar opposites, but we're not really experiencing a textbook economy. We've had a lot of changes. We've had a lot of things that never happened before. And we all had to basically evolve and adapt, adjust from it. So, all this is telling me that there is a great chance that there have been some considerations, despite the pressure that's been put on to Jerome Powell and his staff, his team, to decrease interest rates maybe as of September. So, and if that is not the case, then we'd be asking ourselves, then why would all these billion-dollar corporations literally press buy today? It's obvious that risk is back on. Risk is back on. So he talked about the elements of the revised consensus statement. He said this year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw inflation situations can change rapidly in the face of large shocks, especially what happened this year. I mean, not this year, but and during COVID, March 2020. He said, uh, let me see, what else did he? Yeah, so basically, he was saying there's nothing magic about a 5 year pace. That frequency allows policymakers to reassess. Like, I think we definitely have a lot of sample size. I mean, shit, even me as a trader, I'm like, man, these 5 years done taught me a lot, a lot. So now this helps to kind of, even with AI too, just to help the old heads and the economists to have more of an idea how they could really drive this beast into a control mechanism where we can see some sort of relief. Now, if interest rates drop slightly in September, as we all can see, other banks have dropped their interest rates already. Everybody gonna start saying, well, if we drop to 0.25 or 0.50, then it will start making us expect more and more drops. Because here's what I was about to say. Even as a trader, right? When you are so deep in profit or you're up in profit, you gotta ask yourself, if I keep this up, I might experience tilt. I might blow the account. What should we do? Decrease the risk. So I'm seeing this I'm seeing the scenario as all right, after 5 years, we went from 0%. We raised the interest rates to kind of slow down the faucet here of pressured, pressurized water of profitability that people are still milking till this day. People who understood how to take advantage of it, right? This was for the most part, many of us, our first experience of like a swan event could look like. But after 5 years, I think he's saying it's time to kind of decrease the interest rate a little bit just to give us a breathing room from all this profit that's already been made. I think even those who made profit are looking to refinance their debt. Secondly, um, I don't think anybody will be mad at a decrease of interest rate. And the banks who were charging 5.5% at this point, they done made most of their money back anyway. And so that allows for people who know how to manage debt and the business credit or the funding or the hefty investments that a lot of people have made. It'll allow them to like move the money into the economy and restructure certain things just for the economy to still be stimulated and not be overstimulated, because a gap from going from 5 to like 0%, that's huge. So I think this is starting to look like a good period. Jerome leaves, even when Jerome leaves, right? I think is I think we can all agree that because he didn't just make decisions out of emotions, it's allowing for even the next person to carry the torch. And if they continue to lessen the interest rate, I think we all finna be happy, because now that makes it less expensive to borrow money, less expensive for the economy, and then of course, the little guys like us will see maybe a lessened price in groceries, and that too would make Trump's presidency look really good, because now not only did we see the worst of it, but we could probably just have like a nice little smooth 2% as a soft landing. And maybe that might take another year and a half or 2 years, but I think everything pretty much lines up by their goals of 2030, where this decade itself, my God, this decade itself was basically on level advance. But by the time they bring interest rates down to zero, oh, 2%, sorry, I think this would be the area, the period where like crypto adoptions have fully like, you know, fully emerged or fully like acquired. Like we're kind of getting used to this new way of life. And then by then they'll just literally give us a, well, how do you say this? A relief that we're looking for. But by then, the rich who already had much capital and profit, they're just gonna reinvest it, reinject it. And I think this is where we're just gonna like keep going, which is why like I now understand as a young investor, or as guys like us, you just never stop investing, because even if things go from high to low, when it starts to go back up again, it's either you had profits to move around, or you're exiting some positions, or things are looking on the up and up for you. But if we didn't do nothing throughout like the ebb and flow of the markets, or we're not learning how to like take advantage of what we're experiencing, what we're learning from the losses we've taken, then these last 5 years won't really do much. We'll still be stuck in a loop, complaining, not doing anything about shit, and not really taking the lessons for what it is. I feel like these past 10 years, especially these past 5 years, has shaped me to be the person that I am right now and the person that I'll continue to grow into. It's like it done matured all of us. If you've been a trader these past couple of years, it definitely toughened you up. It definitely like changed your mindset. It definitely made you stronger because you either went through the worst of it or you making the most of it. I don't know which one y'all are, but I just know like this is definitely it's kind of like you know how sometimes you go through war times and you become very like smart about your finances or safety. I feel like this market these past 5 years, like experiencing all these things, definitely has made us more mature. Would you guys agree? Oh, speechless. Oh, we have one question. Okay. Um, he mentioned inflation risks are tilted upward while employment risks are downward. How do you assess which side should take precedence in monetary policy? How would that affect the market as you trade? All right. As we see it, which market are you talking about? That's one. Number two, if he says inflation risks are tilted upward, inflation itself, that word can mean so many different things. Inflation means growth, profit, and also price that is charged to do business with the banks and the customers and clients. How does that affect the market? Well, when it comes to the market of US 30, it didn't matter. Hopefully, you're talking about US 30. It didn't matter what inflation was looking like. We all see that US 30 all continues to buy since the beginning of US 30's emergence. It's either going to buy aggressively when there's more when there's a decrease in interest rates because institutions will buy because it's less expensive, or when the employment risks are downward, that means there's not a high risk for employment if a lot of people are hired, right? If there's a lot of inflation, for example, like if we increase interest rates again, then it'll put a lot of pressure on the economy again, which then it crumbles down into like, what is the job market looking like? How are people paying back their loans? How are people paying their bills? How are people taking care of their rent? But if the inflation of price and profits comes into the economy, then the US economy itself has money to like pour back into the American people. And then they have to make a consideration for like kind of reducing interest rates just to give the people ability to breathe, because we are basically the direct impact from how things are looking. For example, if your employer is getting pressure to increase price on the goods and services, or they have to decrease their spending, which is why sometimes you see a lot of people get let off, people get let go, because it's expensive to maintain a business. But if, let's say, the economy is doing pretty good, then it doesn't matter what inflation is looking like, as long as it stays steady, so that it can give businesses and employers time to adjust. So in this market, when you're trading, let's say US 30, where you're trading the Dow Jones, if there's ever a pullback, but you hear there's like less interest rates, that's always gonna make the market go bullish, even even faster, right? But when it comes to gold as well, you might see the price of gold increase because it's also a hedge against inflation, but you might see the price of gold also range. But let's be honest, gold itself, every fourth quarter, really will be and should be an asset class that you think about position trading for months, because the price of gold in January, which was at 2,000 and 2,600, versus where it's still at right now, bro, that's 3,600. That's about 1,000 points. 2006, 3,006, like, yeah, this 8,000 pips off of one position these past 8 months would have made you about it, man. Even a point zero one would have made you $700-800. Point zero one off of a swing position in time. So this is what these things mean. As a trader, you got to really understand what it is that you're looking at, what the pair that you're trading tells you, and sometimes you got to really just go to the higher time frames to ask yourself, hey, I know I'm a scalper, hey, I know I'm an intraday trader, but how can I be more out of this market? How can I think about long-term investments? A lot of times, our setups play out, but it was just all about how did we see it? How did we understand it at the time? Or if the price action was iffy within an hour to 2 hours, or even maybe a day or two. But what did it continue to be iffy for the whole week? Probably not. So as a trader, it's a very good question to ask. But like, what type of trader? Because traders are just people who are constantly looking for opportunity in the markets. But opportunity will always be there. You just got to understand where your edges, where is the opportunity at for you, and how to take advantage of the opportunity. For me, I feel like going into 2026 is definitely going to have to be some positions that are placed that don't get touched. Because even from what I've learned these past couple of months, looking at the market constantly from like 2023, I'm like, man, now I know for sure some positions need to be held, some accounts need to be held for a whole year. Sure, it might be in drawdown for a couple months, but asset classes like gold, man, I'm kicking myself not realizing that. Like every fourth quarter, if it wasn't in November, then it damn sure would be around December. And even if it pulls back in, there's gonna be profit to be made. On a conservative note, you're gonna definitely see a lot more in percentage gains if you just hold some positions for months, based on the actual asset class that you trade. And each of those years, as a trader, no matter what the interest rates changed out to be, you've seen some asset classes literally continue to perform as they usually do. Look at this. In 2020, June, boom, price sold back. November, they retested this area, boom, they sold off. But since 2022, gold, bruh, between March and like October's, man, gold will retest areas from the past and take off. And take off. No, no matter what the monetary policies have been, we've seen the market do its thing. So it's really up to us to continue to study and become better at what we do, and also use different uh, mediums, different areas of investment to not be so ignorant about, because we don't want to just keep looking back and realize, that it was too late. We should have learned this. We should have known this. We should have did this decision. And sitting here, uh, I'm here, bro. We going to school shopping. Okay, 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 cool. So like, yeah, it's just very important to just make good use of what we're learning here and what we're experiencing. So that way it's important to make the right decision, and also like focus on using those profits that we make, however small, however consistent, however large, however gradual. We need to make something out of the money that we make with trading. All right. It's not a long term investment thing with trading, it's a long term capital leveraging thing. Every time you make profit, like we really need to just lock some things in and go throw it in different things that will sustain. Like if I was actively throwing money in Bitcoin, no matter how much it was, especially in the fourth quarter of each year, I'd be up so much right now. And I gotta remember this for Q4 this year. So all of these are conversations that need to be had. We ought to start thinking like, you know what, man, it's time to make some changes, and instead of just like constantly trying to make big profits and just blowing accounts, um, started from scratch over and over. Even me, sometimes like gotta slow down because we got goals to achieve. All right. So these are some of the things I wanted to talk about. Is uh a lot of the questions that you guys may have, I'm open to hearing it. But there's Alice, I see you just came in. Luckily, this call is recorded. The question you even asked yourself, you will find the answer throughout the recording. How you doing today, though? I see that you dropped a lot of good uh, screenshots. You've been active. It's good.
Thank you. I'm fine. Sorry, my kids are disturbing me. That's why.
You're good. You're
Hey, hey,
I want to go at the bell house. Go at the bell house.
good.
you're gonna go to Annabelle house later, okay? I don't even know that Annabelle.
No,
Okay, let me finish the meeting first, okay?
So yeah, this is how we're looking at the market. Um, what are some of the things that you guys have experienced this week or this month, whether good or bad? What are you guys working on right now? Are you uh, still in certain challenges? Are you on the way to getting payout? What are some of the things that you've learned about yourself this week? Natish?
Gold was playing around a lot.
Mm,
We didn't even actually know the direction.
yeah.
It was just creating liquidity, grabbing liquidity. So maybe for me is to learn more to identify best liquidity area.
Mm-hmm. Mm-hmm. And sometimes everything that's happening in the middle, we just gotta let it do that, but wait for it on the 4 hour structures. and capitalize off that. That was very well said, Alice. Um, Many times gold finished buying, and when it made it to the 4 hour highs, we retested it. What kind of threw my trading off is like I wasn't a person who would start trading on Sunday. And I definitely try to wake up in London on Sundays, Sunday, Mondays, and I end up not waking up. And unfortunately for me, that be the beginning of the best entries for 4 hour entries. And then like sometimes I go online and I'm seeing, different traders that like held their position since Sunday and holding the whole swing for the week and catching 7,000 pips, 700 pips and stuff from gold. I'm like, damn. So there's a lot of different little things that are helpful to understand. If we can't catch it on the internal structure, we got to catch it on the external structure or the area of interest where price um, finally finds itself a zone to really show us better structure. Like when price came back here to retest, I knew it was either it was going to keep selling or respect that zone, and then boom, here we go today, which helps us to know what will most likely happen next in the following weeks. Um, which also reminds me, next week you have unemployment claims. It's the end of the year. I mean, the end of the month. August was quick. Not much going on, thank goodness. So yeah, price should probably be slow, hopefully. Hopefully. But yeah, 4 hour structure. Once we catch these things, we catch the retest. These are usually some really good swing trading opportunities. 4 hour structure, demand zones, guys. All right. Any other questions, statements?
US buy was obvious this morning for me.
US 30 buys?
Yes, because
Mm-hmm.
and NAS. Because if you look at US 30 monthly chart, it shows 100% buys.
Mm.
So for that, I was sure. But gold, I wasn't sure. But I played on the structure on gold.
Okay, okay, okay.
But I wasn't 100% sure. But US monthly, if you look at the drives were not complete.
Yeah.
That's how I figured out that they are gonna go higher.
Right. Yeah, you're right. You are absolutely right. Good job. Good job, Alex.
Usually they go oppositely, but today they went on the same side with gold.
Mm-hmm.
Right. Kind of like back in November last year
You want
when
to put it?
gold sold and US 30 bought, but then gold bought later. Good observation.
When I took gold, within 3 minutes, it's starting going. I didn't even know there was news. And as soon it knocked my TP, I didn't look to find something else. I just close it and I call it a day.
Yo, good job. Sometimes these are the best. Like, wait, what happened to my position? Oh, what? Did it close? Wait, closing profit? Oh, hey.
Sometimes you don't close and it goes and then it drop. I'm like,
Right.
not this time.
Right.
I'm leaving the market.
You said, man, I got what I got and I'm out of here. Yeah, good stuff. Good stuff.
Early in the morning is best. Then I can have time for the kids all the day.
Yeah. Yeah, it's good that you're finding out some type of balance with the
Yes.
kids. Maybe
And I'm
they
sure you also went up. I didn't check it yet.
yes, it did. Yes, it did.
Yeah, they go
Uh-huh.
to the same direction.
Yes, absolutely. I'm glad you've seen all these things very well. Good job.
Thank you.
Sir Hans.
Miss Quells.
The twins'
Wow.
mom.
Hmm.
Whew,
How are you?
I'm tired. This girl, she working me out today.
Oh man.
Yeah. Um, the market's been crazy this week. Definitely whooped my ass, but um, you know, we take wins, we take losses. It's always another day, of course. But I'm so mad, and you're gonna live such a long life. I was talking to hubby about you, like, yo, I can't wait to tell Hans this. I was so mad last night. I did so well during agent session, trading gold. I sold gold. I said, you know what? I'm locking it for the rest of the day because this week was so crazy, and I
Hmm.
was like, I need to focus, on her for today, getting her ready and stuff. And then 9:30, I see this madness. I'm like, oh no, today was the wrong day to lock myself out of my account.
Hmm.
Today was the wrong day. Why I choose to have discipline on the best day of the week? And I
I
had
hate
a
that.
feeling, yeah, I had a feeling something like this would happen because of the week was just so shaky.
Yeah.
The last day had to give us what we needed, but I just also did want to practice my discipline, and I already got profit, so I'm like, I can't be that mad, but I'm just like, wow, like,
Yeah. Yeah. It'd be a lot.
But your salon yesterday was good. 2 days ago, I think.
Yeah.
She got a beautiful set. She just didn't let it run longer.
Oh yeah. You know what? Let's talk about this, right?
Yeah, the sale was like, I'm like,
Yeah, you caught a nice sell. A nice sell. But that's the problem with sales. You gotta know like where you're exiting at because they will find buys, they will find zones to buy from. Them
right.
yeah, them last Thursdays of the week, Fridays of the previous week, my strategy is still like accurate. And I'm not gonna lie, even I gotta go back and watch some of my videos. I'm like, bro,
But I
I
could
think
have got out. That was the thing. I just was trying to hold, trying
yeah,
to trying to pull a Hans and trying to hold the move when I knew I should have just took the profit because I had like $200, $300 profit. And for
yeah,
me, I was like, yeah, that's not bad. Like, cause I had made more profits. I'm like, I could close, but I was like, you know what? Yo, let me try to see if it'll go down more. And the zone was valid because the next day, during Asian session, here it goes,
I know.
it made the final move. So like I was accurate. It's just they didn't want to make the move at the end of the day. They wanted to wait till next session to finish the move. And as you know, with futures and stuff, you gotta close your account.
Yes.
At a certain time, you can't continue to hold. Like if you're on a live account or whatever, whatever. So yeah,
Yeah, I know how that feels. Um,
but gold, which gave me another confidence that the buy was gonna continue, is that today is Friday and Thursday failed to break Tuesday low. They respected Tuesday order block, and they came back again, and then again a third time. Same, I'm like, okay, they will hold Tuesday for the rest of the week. The week is even ending today, so
that's true. Yeah.
Today I completed mine by before the news broke out. I was done already.
Hmm.
In and out, got a buys in US 30. Boom. I just have 80 more to go for my get funded.
That's good, bro. I'm proud of you because you made back what you lost already when it comes to the mistake. You saw the mistake, you understood it, and you took action. That just goes to show you, no matter how much we do make some mistakes, with skill, you haven't lost it. You didn't lose your edge, you lost your cool. Keep your cool.
Yeah, that was a costly mistake, Hans. I
Mm-hmm.
must say.
Mm-hmm. But
I was
listen
so
though,
I was so happy, but then I think my excitement took the better of me. I believe
yeah.
that's why.
But just know when you make certain profits, when you're waiting for your payout, you don't touch that shit.
Never in my life again.
Exactly. All right. So, guys, this was um this was what I wanted to talk about with y'all. I really am proud of y'all. I hope to see more progress from everyone, including myself, because it's important, right? It's important. But as far as everything, I think we broke the market very well. And Sunday, I might even honestly do a webinar a little earlier, maybe at 6, 7. Um, I need to make sure like some positions are just well understood. I used to be
Wow,
like,
US
oh,
30 is moving like how it was moving when Trump was elected.
yeah,
Those that era. They chose the day to do it. And I was so cautious too. That's why I locked myself out. I was like, I don't know. Jerome may mess stuff up. Like, it
hmm
may not really move. I was thinking of all of that. I was like, what, better safe than sorry.
I did not plan to trade today neither. It just so happened that I saw the volatility, took advantage of it a little bit. But I'm so glad you mentioned that because it sucks. It's tough, but see, I'm signed before I say this. Whenever you had made that decision to not trade today, just accept the fact that it was the best decision.
Yeah, yeah, that's what I'm trying to do. Like, because today's an important day. I've really been waiting for this era for so long, and so I'm like, you know what? It's all right. It's all right.
Man, like a wise young goddess had said, it's okay.
I know
I'll
it's
never forget
okay.
that statement. So young but so wise.
I know.
Yeah. And it's really okay because dwelling on the fact that we could have made some money when we decided to be disciplined is punishing ourselves for being disciplined, which the mind doesn't take well. So whether the market ran 3,000 points and you didn't catch it, and you said you wasn't going to trade today, that was the best decision. All right. I wish the 1st of August I either didn't trade or I walked away sooner.
Same. I gotta
Because,
have this mentality more often.
mm-hmm, because guess what? What you missed is whatever feeling we feel is short sight. Let's just pay attention to the insight because you don't want to be making any decisions that you have to have regrets in hindsight now that you have foresight. Okay.
Right.
So
Right.
it is what it is. At least we know direction. We know there's going to be some pullback. But when I tell you US 30 is so funny. But what we can definitely say about US 30 is it will buy. And
Yeah. From now on, bye, 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 bye.
mm-hmm, like and the best areas to really pay attention to is the 4 hour time frame, the daily time frame. Um, but when we take sales, it's like, hold on, what's on the left? Oh, last Wednesday's lows, Thursdays. Okay, I'm out of that set because they might just buy from me. Or you take a sell, you look at the previous day. Where is price at? Oh, I'm out of that set because we know this is a bullish pair. No matter how sometimes like, yeah, sure, oh, August might be bearish, or but I'm not gonna
Hence,
lie. Somebody
hence
is
the
right. Hold
chart
on a
is
second. Hold on.
divided into, and we don't see it clearly. I see your picture twice.
And so you have dual screens showing up. That's all.
Yeah, I do. Um, 1 second. Ah, I want to see what the recording looks like when I finish, because when it comes to Zoom, I hate when the recording I'm watching it and then this is small, very small square of me talking, and I'm trying to figure out how to take advantage of these sort of webinars that I do, so I could just clip it. But like, I don't know if y'all been seeing how Q's posts have been lately. It's like he's doing a webinar, and then whoever's editing it has like his face a little bit larger, and then the chart is at the bottom. I'm trying to see if I could do that, because like I've slowed down on content posting because I give information. I like doing that instead of just showing profits too much, because when I stop showing profit, I get less. Boss, please, how are you? Hey, give me money. Man, how I'm suffering. And I'm like, man, look, I'm not here to show you that I have money, and no one will help me financially if I fuck up, right? I can't help, but also my spirit doesn't like hearing that, because I want to help, sure, but like I can't help everyone, right? So I instead would rather like post things like this webinar that we just did. I need a little guidance. So when I shared the screen today, I wanted to do the split just to see how it looks like when I'm looking at the recording. But can you guys see better? Nope, no screen. There we go. Yeah. So the pullbacks when it comes to US 30, like you always got to be attentive on where it's pulling back to. Wednesday, Thursday, when price, um, I for sure thought they was gonna buy from here, and they started looking real good, and they lost volume and they sold. I'm like, okay, but today when they retesting that Thursday low, we all knew what it was gonna do, you know. So ain't nothing like a Tuesday to Thursday just not giving clear signs of where price is going. And then by Friday, like, man, you was playing all week, man. Now you want to actually give the move.
Like, and I really should have seen it. Like, I feel like it was a huge slap in my face. Like, of course they were doing this because Friday Jerome was gonna say whatever he was gonna say,
Right,
and then that's when they was gonna make the whole move. And I seen the whole play, the consolidation of it all.
right.
Not sure if it wants to go down, not sure if it wants to go up.
I hate that though. Like they really play and toy with the volume
Right, right.
until they're
It's
ready to
the
push it.
volume, right? Like that's because you'll be thinking like, all right, we about to get volume. Like, I mean, you'll see volume, but it's not as much. But you'll think like, all right, maybe it's building up to get there, but then it doesn't get there. So then you like,
Mhm.
oh man, I wasted my time.
Oh gosh, US played differently. 12 hours. It took 12 hours to kick.
Mm.
3 4 hour candles. Whoa,
Yep.
wow. That was money. Jeez. Hmm, that was beautiful.
Loso's doing a great job with content. But yep, that's all I have for today, guys. We'll see each other next week. Talk to you soon. Stay profitable. Keep your mind sharp. Don't dwell on the past too much. And if you feel like you are, take some notes about what you'll do better for the future. All right. Love y'all. Talk
Thank
soon.
you.
Peace, love, and
Great
blessings.
weekend.
Okay. Have a
Bye.
good
Have a
weekend.
good weekend.
You too.
Bye.